we have some really critical stuff happening here this week with the FOMC. Are we going to cut 25 basis points or 50 basis points? Of course, the bigger cut would lead to probably some weaker dollar index moves, as well as a pump for stocks. And a 25 basis point cut, I think, is what the market is currently expecting. Very likely that is what you are ultimately going to get when it comes to this week. We'll see, though. The dollar index is moving lower, continuing its downtrend. We've been in the camp here on this channel of staying bearish on the dollar. A lot of weakness in the data, which has made it really not super attractive to me in terms of a long side action. In fact, most of this year has been just a wash for dollar bulls. The long story short, right? The big picture is the labor data really weakening is a tough story to really get super bullish on the dollar. Because if you're looking at the labor data and it is just sinking, the challenge with that is that's going to get the Fed's attention and that's going to force them to cut interest rates, right? The Fed is in, okay, we need to cut rates mode. And we see that very negatively impacting both stocks and the dollar. Well, I should take that back. The dollar is negatively impacted it. We can already see dollar index is trending lower. Metals are ripping higher. But stocks have yet to materialize any of this macro uncertainty, which I think that they will. Not today. Stock markets are back to those highs. But I think that there is a serious potential that you could actually see a sell the news event. What I mean by that specifically is the rumor has been, hey, the Fed's going to cut. The Fed's going to cut. It's going to be great. I think that the fact, sell the news, sell the fact, that expression, historically, believe it or not, rate cuts, post rate cuts, there are many instances historically where the Fed starts cutting interest rates and it actually sends stocks and metals lower. We could get into the metals component, which is more complicated there, but for stocks, it actually kind of makes sense. If you think about it, the Fed typically cuts rates. Why does the Fed typically cut interest rates? Well, most of the time, the reason the Fed cuts interest rates is because the data says, hey, we need interest rate cuts. That right there tells me, okay, if you've got a situation in which the Fed's saying, oh, we need to cut because we need to help the jobs market, what happens is, in my opinion, you have a risk that, okay, the Fed's going to start interest rate cuts, and then the market is going to say, all right, great, we're getting our rate cuts, but why are we getting rate cuts? Oh, we're getting rate cuts because the economy is weakening. That is my opinion about it, as I think that you could get an event where you see a buy the rumor, kind of like, hey, the Fed's going to cut, and you get all these kind of hyped up moves. And then reality kind of settles in. And I think that people are going to say, hey, look, the macro looks like we're struggling. Looks like the economy needed those rate cuts, not necessarily because it's just, that's the camp of, there's two camps in this rate cut thing. It's, hey, we're cutting rates because, the economy's fine. We could just use a little bit of help. And then there's other people, more so on my side, who are like, hey, you know what? The economy is actually showing some real weakness here. And rate cuts are needed. It's not a want, it's a need for rate cuts, right? I think that the Fed is looking at this data and saying, okay, yeah, we gotta cut rates. And so if they have a need to cut interest rates, to me, that is less attractive of a story for stocks. Now, I know I'm coming across pretty bearish here, and it's because I do think that the market is due for a pullback. But the problem is, if you've been watching, I've been saying that for like 2 months now. So by no means have I been shorting or trying to call that this market is going to top, that it's going to sell off, it's going to roll over. So understand, I'm not making a bet here either that the stock market has to roll over. But I do think that you are sitting at a pretty good opportunity for the market to pull back, because you have this environment where, okay, why are we cutting rates? Labor market's weakening. So I made this other point though. Why would metals also potentially come down with it? Well, if you actually get a shock to the system where people start to worry about recession or worry about true slowdown in the economy, what interestingly happens is that you get, if you were to get a broader sell in markets, more of a risk-off move, what can happen, especially in sharp market drops, if you were to get them, for example, is metals actually can get sold simply so that liquidity can be raised for, or cash can be raised for companies that are, or hedge funds, et cetera, that perhaps need to do so, like leveraged funds, all these sort of institutions that may have leverage on the table. If the market drops substantially, and suddenly they have to kind of ante up cash reserves, a lot of times that's where gold can kind of get sold too. So let me show you that. Let's go back to, for example,
market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
2020 is a really good example of what kind of can happen with gold. So you have a shock to the system and everything gets sold. Here is March of 2020, shock to the system, gold prices, because recession fears spiked dramatically, you had a 15% drop in the price of gold. Now, that was much more of a shallow dip than it was in stocks and indices, and gold proceeded to rally harder than indices did for a little bit there. Eventually, indices did catch up with all the money printing and kind of the stimulus. Stocks went crazy in 2021, but what I think is important for us to remember is that typically, if you are getting some sort of like significant sell across the board, gold and silver typically do also get sold too. So understand that gold and silver, in the event that you do get some sort of liquidation event, some significant selling, if you were to get that, it would likely also mean gold and silver move lower. But those dips, in my opinion, would be more attractive. Now, again, I'm not saying that I think, everything's going to tank tomorrow. I'm just saying that you have to understand that gold and silver are a store of wealth. Remember that if markets fall out of the skies, they got to grab their store of wealth and use it, right? So that means sell their wealth. So in 2008, for example, if we go longer term, right? 2008, you had a pretty substantial sell-off in the price of gold at the time. So you can see here's 2008, right? So, oh my gosh, the world's going to fall apart. There was a 34% drop on gold, which is big. Gold doesn't move that much compared to stocks, I suppose, in percentage form, right? So to have a 34% drop in gold was pretty substantial. Now, from there, the market ripped and ripped and ripped. I would not be surprised if we see something similar in the gold and silver market. Not necessarily, again, I'm not saying this is happening this week or anything. I mean, you could get an event where the Fed cuts interest rates, and it depends really what Powell says this week, really. But if you get some sort of market reaction where people are fearful, yes, gold and silver prices could drop. But my opinion would be those dips would be great dip buying opportunities. Not financial advice, that's what I'm thinking. So if I were to see gold prices make a move back down to this 34.25 level, or even the bottom end of this range, I mean, I think that the bigger picture, those would be buy the dip opportunities. From a trading perspective, I like the 38.2%, looking for a bounce there. If you were to get a pullback here, this would also be an area where I could look to get long around 34.25. But again, I know I'm talking a little historically on metals. I'm not looking to short them. I am still long SLV. I'm long silver. I don't have any gold positions, but would be potentially willing to pick up some gold positions if you saw a market pullback. I think something else interesting that I saw on metals that is worth bringing to our attention here today is if you take a look at some market sentiment, look to put to call. So this is options flow for gold traders. They went really high on the put demand last week. I thought that was really interesting. So you actually have crowd sentiment, believe it or not, betting against gold here, at least on the options exchange. So I think the crowd thinks, hey, gold's overbought, it's got to come down. And that actually, to me, signals you might get a further pump just to, you know, how the market can be, right? When everybody thinks, hey, it's going to come down, that's when it just flies through. So I wouldn't be surprised if gold and silver continue their melt up. I am by no means saying that I'm short selling or closing.
So what has been happening in terms of news for today, we don't have much. So we pretty much have nothing in terms of the red folder news, but this week is going to be pretty busy. So last week, our key data releases were PPI and CPI. What was the conclusion for inflation? Well, if we check the CPI for the US, you can see that the inflation is rising. So inflation in the United States is actually going higher, although PPI is kind of softer. CPI is still well above the 2% target, and it is currently at 2.9%, and it is in an uptrend. So inflation is rising. Now for this week, we have 4 interest rate decisions. So 4 central bank interest rate events. First, we have Canada. So we have on Wednesday, Canada and the United States. We have the Fed, which is going to be really, really important. I would say the highlight of this week is going to be the Fed interest rate decision. And then we also have the UK on Thursday, and we have Japan on Friday, potentially. So it's tentative, meaning it is still not 100% certain if there will be an event or not. So this can change, but we can also see an interest rate decision from the Bank of Japan. So if we go through the rates for Bank of Canada, it is forecasted that they will cut interest rates. For the US, it is also forecasted that we will have an interest rate cut, which we can also check out in the Fed Watch tool. As you can see, 17th of September, pretty much 100% chance that they will cut interest rates. People have a question, will they cut by 25 basis points or 50? I say 25. I really don't think they're going to cut by 50 basis points. So we have 3 rate cuts priced in for 2025. And I don't think we will have a 50 basis point rate cut anywhere in 2025. I think we will have 3 rate cuts of 25 basis points. So that is also what is priced in the Fed Watch tool. So that is for the Fed, again, a cut. For the UK, we do have a forecast that they will hold the interest rate the same. So the UK is in major problems, as well as Canada. So Canada and the UK are facing some very bad economic numbers. They are the 2 biggest, you can say, fiscal sinners. So they have bad GDP, rising unemployment, inflation in the UK is rising. In Canada, it is kind of around 2%. So for the UK, you have pretty much forecast that there will be no change. For the Bank of Japan, we do have a forecast that they will not change the rate. But if you have been following the news, if you have been following financial juice, you would have seen that they are open, or the Bank of Japan is open to possibly hiking the interest rate, raising the interest rates, which is bullish for the yen. Will it happen? Will it happen this week? I don't think so. Will it happen by the end of the year? It is highly possible. So it's a big possibility. No one knows for sure, but it is possible that they will hike interest rates for the yen. So for example, if you want to go short USD yen, it may be an interesting trade if we do break this support level. That is one of my trade ideas, and I do have an alert set if we do break those lows. So let me see the comments. Okay, let's see. Hey, Hey, Slugmeister. And okay, we don't have any requests so far. It's a bit of a slower day today, so no news, no major catalyst for market movement. I am still in free trades, so I'm in euro dollar buy, I'm in euro GBP buy as well around break even, and USD CAD buy, which is running also around the break even mark. So what I wanted to go through was essentially my watch list for the fundamental strategy, or for the strategy that is based on the daily chart and that heavily includes fundamentals as a confluence to take a specific setup. So the first thing I have on the watch list is, of course, the US stock market, NASDAQ, so a US indice. I'm focusing on the NASDAQ because the S&P is good, so it is pretty bullish, but I think NASDAQ has more room to push to the upside because of artificial intelligence, because of technology companies which have been the best performers in the last couple of decades. So yeah, I'm betting on them the most. Gold, you want to see gold? Okay. CAD Swiss, yeah, sure, no worries. We're gonna cover the requests. So for the NASDAQ, looks like we are continuing higher. Looks like we are still at the all-time highs. So continuing to break them and just exploding to the upside. I don't want to buy here. I think we are overextended. I think we could see a pullback, and I don't want to buy when the price is so far away from, let's say, the 20 MA, and when it has been going up for such a long time. So I'm looking for a pullback. I'm looking at this level of support around, let's say, 22, or you can say 2300. And I would buy if we do hit this level. So that would be my first level where I would get in for the NASDAQ. Pretty simple. I've been talking about this for a couple of weeks now. I've been talking about this ever since we broke out of this level, I would say, and we just never got a big enough pullback for me to get in on a buy trade. Now the next one is going to be gold and silver. Gold and silver I'm very bullish on. So I really like gold and silver. I think right now the best assets to trade, so the best assets to trade is going to be gold and silver. Absolutely. What is the reason? Well, you're getting inflation in the United States. You're getting NFP that is slowing down. So if we go to labor, NFP, and if you check out the downtrend, so the jobs market in the United States, which is very, very important as an indicator of the health of the US economy, this is going lower. This is in a steady downtrend. Also, quick plug for the Edge Finder. If you do want to get this software, you can use my discount code, which is MARKO. So if you do want to get the Edge Finder, if you do want to get an extra edge in the markets, definitely do check out the Edge Finder and use my code, which is MARKO. Inflation, NFP, we can check out the GDP for the United States. It is okay, it is positive, but again, the main issue is, and we can check out inflation that I showed you, which is rising. CPI inflation is definitely in this sort of an uptrend. So all of the factors that we have, and also rate cuts, which will happen, it's like 100% certain that rate cuts will happen. So rate cuts are bearish for the US dollar. Rate cuts also signal more inflation. So when you get rate cuts, usually inflation goes up. Now, to protect against inflation, investors buy gold and they buy silver. Pretty much every single indicator, every single data release is pointing to a bullish gold and bullish silver. So my favorite assets right now, definitely these two. I'm looking for buy setups. So I'm definitely looking for buy setups. And I would like to see gold reach this level of support. Okay, so gold to reach this level of support around 3,500. I think that's a pretty good psychological level. It's a round number. It's a significant area where we could see a bounce. And for silver, I want to see it hit let's say 39.6. So I think 39.6 is a good area of support. And right now, the price does look a bit overextended on both metals. Pretty much same thing as the Nasdaq. Looking overextended, but long-term I'm bullish and I'm actively looking for buy setups, actively looking to get in. I just don't want to buy all-time highs. I don't want to buy after this explosion because I do think a pullback is very likely. The 20 MA is a nice indicator that you can use to tell you when the markets could be overextended. So if the price is very far away from the 20 MA, like it is right here, then that tells you that the pullback is very likely. You can check out the prior price action. You can see when gold has had this sort of an explosion. And over time, it definitely goes back to the 20 MA, gives you the pullback, gives you the opportunity to get in. So that's why I like using the 20 MA. It's a good indicator of, let's say, dynamic support and resistance, and also to show me when the price is overextended. Gold could hit those levels. So I would say, actually, by looking at it and by thinking about all of the fundamentals and by looking at the current market environment, 4K could happen in the next few months. Okay, so CAD Swiss, CAD, CHF. So for the CAD, I'm really bearish. I'm really bearish on the CAD. Let me just quickly show you the data. So a couple of data points that you can see on the Edge Finder. If we go to Canada, you can see only 25% of data is coming out bullish. So very bearish reading here. If we go to the GDP for the CAD, what do you see? Well, you see pretty much negative GDP and sort of stagnating growth. If you go to the unemployment, this is by far the worst reading. So if you put in the CAD, you can see rising. So rising unemployment rate. See, definitely rising unemployment rate. So 1 year ago, or let's say from January 2024, unemployment was 5.75. Now it is 7.1. That is a huge rising unemployment number, and that is very, very bad. The final thing is, of course, inflation, and inflation is below target. Okay, so the inflation is below target, below the 2%, but it's close. So it's close. So there's not a whole lot of room to cut interest rates. That's why for the CAD, I'm really bearish on the CAD. Also, I do have a USD CAD long, which is currently around break even. This is a signal in the A1 Discord. So if you do want to join the A1 Discord, and if you do want to get all of these signals, you can again use my discount code, which is MARKO, and get yourself a nice discount. Again, I share my trade signals. I share everything I'm looking at. I give you a daily forecast. And also with the daily forecast, I also do fundamental analysis for any crucial event. So this week, I have my hands full because we have 4 central bank decisions. That means a lot of new fundamental data. So all of the updates I put into the Discord. Yeah, we talked about CAD Swiss. So I'm bearish for the Swiss. I haven't done a lot of work on the Swiss, which is something I need to do, but this chart is definitely in a downtrend. So let's also check the top setups page here for CAD Swiss. Bearish. So the Edge Finder is getting a bearish reading, which is good as well. I would be a seller. So I would be a seller in this market. We also, as far as I can see, on Friday, the 5th of September, we broke out of this key level of support, which is nice. To be honest, I would actively look for sell setups. I'm in USD CAD long, so I'm not that interested in shorting CAD Swiss. But if I wasn't in USD CAD long, I probably would be looking at going short on the CAD Swiss.
Aren't you supposed to trade yen in the evening at night? So the way I trade yen pairs, just to get back to trading, is so this is my process, okay? When is it lowest? At what time of day, what time of night is it lowest? Generally speaking, my entry on the yen pairs should be about here, right? That's a low for the today. And that's about 6 a.m. my time. For New York, that's about 2 a.m. None of us is awake of that. Okay, maybe midnight actually. None of us is awake at that time. So what I generally should have done if I had internet, I would have had a limit order there. Placed on about that candle. That would be like 10 p.m., which would be your 10, 6, 2 p.m. or something. So 4 p.m. Your 4 p.m. New York 4 p.m. That's when I place the limit order for whenever price comes down. Generally, it would be about your 8 p.m. But it was midnight. So somewhere around there. That's what I do every single time I look for a new strategy or to adapt anything in my strategy is when is the low? When, at what time of day? So this is evening, this is your afternoon. When did this drop happen? Okay, it's about London it's around London. All right, okay, so in an uptrend, when is the low? That's midnight. That's about 6 a.m. That's about your midnight. So when does the natural pullbacks happen? And they generally happen around between New York 4 p.m. and midnight. And I don't know when every single time. So I would argue, yes, I should be trading yen pairs. And yes, it is the actual entry on the yen pairs. It's around your 4 p.m. to midnight. But I can't really tell when it happens because that's what the market does, what the market does. Secondly, why wouldn't it come lower? Would you trade it then? Not really. I think that is good enough support and resistance for me. We can't probably think about that one, but I don't like the deep pullback on it, to be honest with you. So something in that direction would have been my plan yesterday. Now, micro here or a whole new, brand new higher high, higher low, to be honest with you. You shouldn't be buying. You're just random Moss guy. The other thing is, and this probably is where I come in, right? Because I offered to talk to you guys for free for 1 hour, right? And I really love those conversations. I really love those. Conversations. The reason why, because you guys are so humble and you tell me what you're struggling with, and I honestly believe, I hope and pray that I can make a difference in your trading, right? Because when I go through strategy, when I go through histories of trading, and I'm not joking, I'm not trying to be bad, I'm not trying to have an anecdote. I've literally seen traders say, that's a good sell. And my question then is, and it hits stop loss. And I'm like, okay, great, that was your reactions. Okay, how many times have you done this? I don't know. Okay, cool. The next sell opportunity, the person that I saw someone saying that they would sell here. And I'm like, well, I always say, and it's always going to be my say, is when does it start, the trend? Be at the beginning, wherever the beginning is. And if you are late, like I am now on this one, you probably should have tried that many times and find out, okay, at the beginning of the trade, you have the potential at least to make, let's say, 130 pips, say 100, whatever it happens, right? You sell up there at the beginning of a trend. Of a downtrend, even though this is an uptrend or range or whatever it is. Okay, we try that. And then you find out, okay, sometimes it actually does go higher. And then the problem that people then start to do and say, this doesn't work because 1 or 2 or 3 times it went against you, because you probably, okay, sometimes it's just, okay, it didn't work. That's part of the variations in your strategy. But then that makes you distraught, that makes you change, that makes you question, that makes you do things differently. So for me right now, to try to come back to reality here, I can say I want to buy that. It's a bit late now, bruv, but all right. Okay, so what do you do now then? I can't say there for tomorrow morning for London Open. That's still a bit 20 pips too late or so, or too high. That still makes me very vulnerable for the 90 pip drop, potentially at least. And to me, we are at resistance. And what I've seen lately, and I'm not going to say that for too long, but what I've seen lately is support and resistance placements. Sometimes some makes it look like this. And then my question to you, which line are we using? Which level are we using? And I just mentioned, or so I just showed kind of subconsciously this. Beginning of the trend, start of the trend, or end of the trend for that matter, no matter how you look at it, that's always going to bounce if we're going to be at range. That's always. And then you can say, okay, we're already trying to touch it here. Okay, I don't know if I'm going to do that though. But at always, beginning of trends is always going to be the resistance. And it can come back like a month later and still react to it. And then this bullish. And this, I would argue, and we had a meeting of support and resistance. And this basically is the pinnacle of how I would say, where do you put your stop loss? Where do you put your support and resistance? And I see traders every now and then say that is a good resistance level. We're going to continue lower from here, like this. And I say, are you sure? Have you tested this? Have you tried this? Are you sure that we are just going to do that? Because in this case, for this current, that's the same level. And it doesn't always for a long time, at least in my experience, hold. It's kind of like where I was caught at the end of the trend and it starts to pull back. When you have those end of trend pullbacks like 100% retracement of the previous move, meaning when we have, as we say, that's bullish for that matter. Can I find another one? Yeah, okay, fine. This is good enough for me. When we start having, also for that matter here, some would say that's a good level. And I say, okay, you have 100% of that move. That's dead. Here as well, you have almost 100%. It's still. The only thing you're lacking here is a brand new higher high. And then it's completely dead. When you have 100% pullback on the previous move in the downtrend or an uptrend for that matter, then also you've already lost. You have already lost in my book because that's where it's supposed to be selling from, up here. And that never happened. So what do you do with situations that never happens? We never got an entry. We never got an entry. You never got an entry. Leave it alone. Don't chase it. Because if you start trying to sell down here, what happens? What happens? Messy. Stop losses. Back to break even. It touches the same level many times, and then you start freaking out and like, but you trailed it. If you sold here, you trailed it, comes back up again, takes you out, and then it continues on. I have a lot of conversation with those who trailed. Nothing wrong with trailing, Nick, but it doesn't fit everyone.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.